High Noon. I am Julie Hasowitz with Remax Suburban.
And I'm Jeannie Goring, Neighborhood Loans, still money in the middle.
Always in the middle.
Always in the middle. Jamie Safransky, Remax Suburban.
And today we are joined by Phyllis with Town Center Insurance.
Hi.
And we're going to be talking about insurance today. And my first question to you is, what's the difference between market value versus replacement cost on a home?
Market value is the value of the home that you purchase it at.
Okay.
And replacement cost is what it costs to insure the home from the ground up if it's ever destroyed in a fire. So you want to make sure that you have it insured at replacement cost at all times.
And what would be the difference? Why would it be a difference? Why is there a difference between market value and replacement cost?
Because replacement cost is with the contractors, their pricing and everything changes every year.
Sure.
So as their prices go up, it costs.
How much is the cement this year?
Right.
You know?
Plus, it doesn't include the land.
It doesn't include the land.
It doesn't include the land because your land.
You're not insuring your land.
Right.
Right.
Yeah.
Okay.
So, and one of the questions that I have is about sump pump and backup sewer versus flood insurance, and are they always included, and how that works?
Neither one of those are included in your policies.
Okay.
Flood insurance is a separate policy that you need to purchase if you're in a floodplain. Backup of sewer and sump pump coverage is purchased by an endorsement, and that covers you if water comes up through the basement through the backup of sewer.
So if your electric goes out and your sump pump fails, are you then covered if you purchase this?
You would still be covered, yes.
Okay. Or if your sump pump dies.
Yes.
Which is
yes,
what
or
happened
if
to
it
us, and we
completely
didn't have a backup.
dies.
Yeah.
Yes.
And now we have a
Okay.
backup.
So now we can bring it around to so our third point here is, should we still do, I was told years ago, go around and videotape everything in my home, like my curtains, like everything, and then maybe take pictures of my expensive stuff that I don't have.
I remember.
Whatever.
Right? Yeah.
Yes, that is important, and they still want you to do that. And
Okay.
the one thing I would always suggest is take that and you put it off the premises. So put it in a safety deposit box or anything like that. And just always keep in mind that if you have anything worth value, you do need to actually schedule that onto your insurance policy, so that way it's covered if anything happens to it at the time of a loss as well.
Or
So
have
what
a
do you mean
separate
schedule?
rider.
Yeah.
A separate rider.
Okay.
So it would be like your jewelry, your furs, your coins, anything like that.
Expensive
worth any
rugs.
value. Rugs.
Really expensive.
So let's say I need to replace my TVs. And now that TVs aren't that expensive anymore, but some people buy really expensive ones.
Yeah.
Is it just you replace it? The insurance company pays to replace that TV? Is it the same brand or is it something similar?
It's the same brand.
Okay.
And because the cost of TVs are so easy to replace now, they usually don't question anything like that because they're going to know that anybody in a home has at least one TV.
Sure.
So they're going to have to know that you need to replace that.
Right.
So certain things like that they may not take into consideration, but other things of higher value they will.
So every time you get something new, like new appliances, choop, choop, choop,
Take pictures.
Keep
And on your cell
receipts and
phone,
everything.
on your cell phone you can take a video and keep it in the cloud.
Yes, that's what
Then
I
you
was
don't have to worry about
Even
taking it to your mom's
I
house.
said you could email the video to a relative or a friend that obviously doesn't live in your home, and they can store it on their computer or on their drive or whatever.
Okay, now I'm going to throw another question that, since we have a few minutes here left, that someone had asked me about what's the difference between homeowners insurance and on a single family home versus a condo or a townhome?
Oh.
Yeah, that's a great question.
Okay, so condo insurance basically is from the walls in policy that is required by the mortgage company for you to carry. And a homeowner's policy, you're insuring the structure, the roof, the basement by endorsement on the backup of sewer and sump pump coverage. And you're insuring your personal property.
And on a condo, the association actually covers the outside structure, the dwelling, and
Most
the
of
walls.
the
sidewalks,
Well,
the
and you're
roof,
gonna like what they cover. That's in the homeowners, the association policy.
There's
Right?
a
But
of
you
insurance.
still, shouldn't you have something, if you have a condo, do you still have to have something that, for liability? It's called liability, right? If you flood the entire building, it's on you if you don't have insurance.
All of your
for that.
policies should carry liability coverage.
Okay.
And it's relatively cheap. Usually $100,000 is no additional premium. If you do $300,000, it's usually $10, and if you do $500,000, it's anywhere from $20 to $30 a year.
Oh, that's nothing.
That's nothing
Yeah,
to
that's
cover
nothing.
So
you.
get it. All right. Well, thank you so much
thank you
for joining
for
us.
joining us.